Is it working? What's up, everybody? See if the stream starts going. There it is. All right. Hey, Happy New Year's, everyone. Let me get the tweet out, and then I'll be right back with you. Hold on one second. Tweet out. Paste this into TrueTrader for the members. All right. What's up? How is everybody? And hopefully everybody had an amazing holiday season, right? Christmas and now New Year's, and now we are into 2023. And I'm hoping 2023 is just going to be absolutely epic. What's up, Kevin? Kevin every Sunday comes in and says, good evening from Lakeland, Florida. I will be in Florida halfway through this year. We will be moving down there. Bought a house there 6 or 7 months ago. We've been renting it out, let the kids finish up their school year here out on the West Coast. And then we'll all move down to the East Coast for some of that Florida weather. What's up, Sunil? Happy New Year's Eve to Oh man, I don't have a water. Yeah, I don't know where my water's at. Oh, I see it. I'll be right back. Let me go grab my water real fast, guys. My bad. Oh, cannot do an hour-long live stream without water. I tell you that much. There's no way. Hey, what's up, Tom? Ragu, happy New Year's to you as well, brother. Hey, Yogi, what's up, man? Went to the gym a few hours ago. Wasn't as bad as I thought it might be. I thought it was going to be packed full of those New Year's resolutioners. Definitely more people in there than typical, but it was, like I said, it was not as bad as I thought it was going to be. Hey, Carrie, what's up, Tyler? No chance of using a straw on live stream. Hell no. This is just plain water. Sometimes I'll have like my post-workout drink on it. Like if you guys see me drinking a purple drink, that's like a post-workout smoothie. What's up, Greg? Happy New Year's. Please, guys, if you could retweet the tweet I put out, or share that same link or this stream link on Facebook, Instagram, Twitter, wherever you guys have family or friends or followers that might find value in this. Yeah, my family had a great holiday. Thank you, Carrie. I hope yours did as well. It's actually today, dude, this is just a really busy time of year for me. You know, we go from my wife's birthday to Halloween to Thanksgiving to Christmas. My daughter's birthday is right before Christmas. And my oldest daughter, it's her birthday today. She's 13. So like as soon as I'm done this, I have to wrap up, run out, and go meet the family. We're gonna go do some birthday stuff. So like, yeah, it's crazy to think that I have a 13-year-old now. But I mean, I guess it just sounds weird saying it. If you guys have daughters in that age range, you'll know that like as soon as they're like 11 or 12, they might as well be 13. Like they start acting like it. Get the eye rolls and all that. All right, so it's 5 p.m. Market time. Let's go ahead and get this kicked off, guys. As always, real fast, just shout out to the sponsors. Cobra Trading, if you guys don't have a broker you can trust, check them out. You'll get a discount if you use the link in the description. hands down my favorite broker for sure. Spikeet, these guys created a product that I use nonstop. Like I actually use them every single day. It allows you to pull historical stock data to backtest strategies and see if your edge is actually statistically, if it's an actual edge. A lot of people just think they have an edge, but they have never put numbers to the test to see if it's real. If you want to save a lot of time, because I used to do it manually, this is the shortcut that can take months and months and months to do it by hand, because you got to collect all these different stocks that presented this setup. This allows you to retroactively cast a wide net and do it in a matter of, depending on how fast you can use the product and get accustomed to it, like as little as 20-30 minutes, you can have data on a setup. ScriptsToTrade, these guys make tools for Tradervue and Thinkorswim, and they sell it by, you can get a subscription package which gives you the whole suite of tools, right? And if they don't have a tool that you think of or would like, reach out to them and they will work with you to design whatever it is you can dream up. Tradervue, these guys are who I use to track my performance metrics. Again, I say it every week, if you're not tracking your performance metrics, you're not treating it like a business, right? This is just a hobby for you, and if that's the case, enjoy your time at the craps table, because that's all this is gambling if you're not treating it like a business, guys. All right, and there's a few names reporting this week, nothing really worth noting at all, and so we'll just go ahead and get into the disclaimer, and then we'll get into the prep. All right, guys, neither I, True Trader, or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about is a solicitation to buy or sell any stocks. It's simply for entertainment purposes only. All right, so I have this screen up right off the bat because I always forget to talk about this, but from moving forward, this should be my first screen after the disclaimer, guys. And it's simply showing you guys the week of economic events or announcements, things that will be possibly affecting the market during this week, right? So you guys need to familiarize yourself with these kinds of things, right? It's one of those things that, to treat this like a business, you got to take it serious and you need to know about these things. So a quick glance. The one thing I'll point out was the FOMC minutes on Wednesday at 2 p.m. It's not a rate decision, right? But regardless, this is the kind of thing that if you don't know, it can blindside you, right? Because it happens at 2 p.m. market time. So a lot of times you'll see other things that come out in the morning, like here's your jobless claims, right? That's another one important to know about. That's Thursday, 8:30 in the morning. Difference is that comes out at 8:30 in the morning, right? So you'll see a move happen in the pre-market one way or another, and then when the market opens, you'll be able to kind of tell what the market has kind of made of that news. Whereas FOMC type stuff comes out midday, and if you don't know it's coming, you might get blindsided. All right, so that's that. Let's go ahead and jump into the prep, guys. So I got the monthly chart up right here on ES. Remember, it's a new year. Actually, I forgot to pull up the prep actually right there. Okay, it's a new year, and the first thing to make sure you understand, especially if you trade kind of what we trade at True Trader, the pivots, and especially emotional moves into pivots and other levels, is that it's a new year. So we are going to have brand new annual pivots, brand new quarterly pivots, brand new monthly pivots, brand new weekly pivots. All the pivots are brand new. Now, as long as it's within the first 2 weeks of a new cycle, I still will put a lot of weight on the previous I want to call it a cycle, but whatever time frame or time periods pivots, right? So, and I've actually marked out on my chart the new pivots. Why? Because TradingView won't put them on my chart till tomorrow morning when the bell rings, but that doesn't help me if I'm trying to prepare ahead of time, right? Like I need to know where these pivots are going to be now so I can make my plans for tomorrow and the rest of the week. So I have put some of them on here. And one I'll just point out, right, is up here is the new annual pivot, which is 4057.08. But the previous period's pivot, the annual pivot, was 4007.5, right? So I will still use that 4,000. I mean, it makes a lot of sense to use the 4,000 level anyway as an important level, not only because it was the previous period's pivot for the annual period. Oh, God, that's a lot of P's I just said. Anyway, but it's also a psychological round number for 4,000, and it's also the 200-day. So even though the new annual pivot's a bit higher up here in, what did I say, 4,057.08, I'm going to be paying attention to both levels, okay? And I just wanted to make that clear. And I actually have, I guess I should have done this earlier. I should have screenshot these new pivots so I could have given you the exact levels. But you'll see I do have, like, the white ones are the annuals, the orange are the quarterly, and the blue are the monthlies. And I didn't bother to throw the weeklies on here on the ES, but I did put them on here just so you can visually kind of see what we're looking at. All right, so now let me get back to the monthly chart because I don't have my pivots on that one. And we always want to start from a bird's eye view, work our way down, guys. We just had the December candle close, right? So now we can see what we're working with moving forward into January. And not a lot has changed, but I do want to make sure everybody is ready for what I've been waiting for. And that is the ability, remember, I can't remember how many weeks ago it was. I believe it was back here in, let's see, was it in September? I don't remember. September sounds like a long time ago. Maybe it was based on a weekly chart, but there's a whole lot of words to just simply say the ability to anticipate is approaching, right? And we did a Sunday prep based on the ability to anticipate and when it makes sense to anticipate versus when you're really just gambling and taking a shot for no reason at all, right? Now, if this monthly downtrend is going to end and we are going to go back into a bull market, and I'm not saying we are, okay? Make sure you guys understand that. I'm only saying, I'm putting this in terms where we can create if-then statements. If this bear market is going to end, it must happen via the monthly chart eventually starting to make higher lows and higher highs. Well, we are finally sitting in a position now where if January's monthly candle breaks the lows of December, we may start to finally have the ability to be putting in the first attempt of a higher low on a monthly candle since September, right? Because if we follow the path down, we pull back, push up, lower high, lower low, lower high. And when we made this pullback in September, that was that, ability to anticipate on this monthly time frame, this putting in a higher low, which it did not, right? But what you were doing, if you tried to anticipate in September by positioning using June's lows as your kind of over under levels, you were able to just have really, really tight risk and know that, listen, we're anticipating, so we have a higher probability of being wrong, but if we're right, the risk reward is going to be absolutely phenomenal. And so you could have put this, and I'm only using the ES because this is the broader market, right? But you could have looked at any equity, individual equity, and had a similar plan. And had you, put it on, let's just say somewhere in the 3700s with risk under 3640s or whatever, you would have got stopped out. And what's really funny is a lot of people would have got stopped out and then watched this move up and got super pissed, right? And they're like, God, I can't believe I stopped out and now we're rallying. You have to understand that it's okay to take a stop because your plan was wrong. Your plan was that this was going to make a higher low and it didn't. And that's fine. It's okay to, I'm wearing the shirt today, guys. It's okay to be wrong. It's just not okay to stay wrong, all right? So we are approaching, once again, the possibility of anticipation. So if we are going to end this bear market and start a new bull trend, eventually we need to make a higher low. And that would happen via breaking the previous month's lows, but not taking out the lows from October, right? So if we pull back, hold here, and then we push again, then the break of December's highs becomes that long trigger. what it really becomes is confirmation that that this is a higher low, right? Because we can pull back. Remember, guys, we can pull back here, start to push up, but if we never break December's highs, this could still roll over and go lower. And then this was not a higher low. But if we pull back, reverse from here, and go above December's highs, then we have confirmed a higher low. And now we can start to look, and this is the difference between confirmation versus anticipation, right? We can anticipate down here and get really good risk reward and be completely okay with knowing we have a higher chance of being wrong. Or we can wait for confirmation when we pull back, put in a higher low, and then get confirmation by breaking December's highs. And then we can start buying dips, risking these lows, knowing that the author has begun to show us there's a reason to be bullish again. And the difference is your risk reward is going to be way less, right? You're down here when you're anticipating, you could be getting 10 to 1, 15 to 1, 20 to 1 if your target is all-time highs and then continuing higher. If you buy it up here on pullbacks, your risk reward is nowhere near that 10 to 1, 15 to 1, 20 to 1. But guess what? Your probability of being right skyrockets in comparison to that anticipation trade. Okay, so I just want to point that out, and I'm not saying that we're going to come out of a bear market, but there are things to start to look for. Okay, and so we need to know what's happening on this monthly chart so that we can start to look for setups on the charts below, the time frames lower. So the first thing that needs to happen, if we need to break December's lows, then on the weekly chart, we need to see a short continuation trigger. And here's the thing, kind of already had one. It not so much on the ES, but if you look at the SPY, right, we totally did, right? Like this right here, we've talked about this, the push up, this little double top thing that it did when it, I can't remember if this was CPI or whatever it was, right, that caused that. I'm pretty sure it was. And then the break here was your trigger. I need to get this back to, hold on one second. Where are my, well, I had a default. I'm trying to find out. Here we go. Bright lines. Thank you. All right. So that break was your little short continuation trigger. Now, because this happened on a higher time frame, a weekly chart, it did not result in that bar break lower on the monthly chart because we were still in December, right? This all happened in 1 month. But that doesn't mean I don't still want to see another subsequent short trigger or short continuation trigger on the weekly time frame. And I totally do on the ES, right? Like, because this did technically break, this was a failed breakout, but it did break to new highs. I would love to see a push higher, and I'll just kind of annotate the chart a little bit for you here, right here. Push higher, which would put in a lower high, and then I want to see a break below 2 weeks ago's lows, right? And then that will get us that bar break on the monthly chart, okay? If that happens, then we can start to look for those anticipations and look where we're going to be pushing down into the weekly 200, as well as some clear support that we've had from previous levels. So there may be opportunities to anticipate, but you need to know what you're looking for. So first things first, right? I need to see a weekly short continuation trigger on the broader market to try to go lower, okay? And if you don't know what that looks like on a weekly chart, the cheat sheet for that is to just look for, on a monthly time frame, us to break December's lows, okay? Because that's what it will amount to if it happens, okay? That's the cheat sheet. Now, when we get into lower time frames, you can't always trust the cheat sheet, okay? It is a non-perfect way of analyzing these setups, so just take it with a grain of salt. But if you do know what you're looking for, if you have been following along with these Sunday preps, if you have been kind of learning these setups that I've been trying to show you guys, whoops, just trying to get rid of these lines here. There we go. So that's what I'm looking for. So let's jump into the daily now, because we know what we're looking for on the weekly. What I think I see when I look at the daily is the fact that we just kept getting bought up off some levels. And I do think that we're going to have another push. On the SPY, the level I think that we should still retest is that 392. I can pull it up real fast and show you. On SPY, 392 is that breakdown level. Remember, this was your, again, I don't have it in front of me, the dates of the announcement and stuff. This was either CPI or FOMC, and they were back to back, right? I think we either had CPI on Tuesday, which I think is correct, and then we had the FOMC rate decision on Wednesday, the very next day. Yeah, so this was Tuesday, so that was CPI, and then this was the rate decision, right? So that's what caused this major sell-off. It hasn't been retested yet. So that's the 392. I guess I should be a little more precise with the levels. 391.97. Might as well say 392. Okay. I would like to see a retest of that. So on the ES, I think we'll push, and I would think we would come up here and test this 39.50 area. If that happens, that's where I'm looking to fade. Any kind of pushes up into those levels, thinking that eventually this rolls back over, comes back under these levels, and then sends us, below December's lows, creating that flush down into levels where, if you wanted to anticipate, that would be the areas to do so. Okay, it doesn't mean, again, remember guys, I don't see anything that would indicate we should be coming out of the bear market. You want to talk about macros or fundamentals, that's not going to be discussed too much on these Sunday preps, because I've said this a million times. You can always find 20 different analysts or 20 different researchers that can give you all completely different answers. The one thing that's never debatable is what the chart is telling me. Okay, the chart right now, it doesn't say we have to end this bear market at all. In fact, the higher time frames are still in downtrends. The weekly's still in a downtrend. The monthly's still in a downtrend. The daily wasn't an uptrend, right? This is the daily. We had a bit of an uptrend here, but all that was a pullback to the higher time frames downtrend. And since we hit that, we've been back down, right? So nothing on the chart says we should go higher. I'm merely pointing out there are situations where, if you're going to anticipate, it makes sense versus where you're just taking shots in the dark, okay? I want to be very clear about that, because I don't want people getting into these trades where they are anticipating, they don't work, we end up rolling over, going lower in a bear market, and people are like, well, Ricky was saying like the bear market might end right here. No, that's not what I'm saying at all, okay? Let's just pump the brakes on that for a second. All right, so I'm looking to fade pops. I obviously the 20-day lines up a lot with this recent level here, 39.15, 39.16, whatever that is. And depending on where we open tomorrow as well, right? I don't know if we're going to gap up, gap down, open flat. If we open flat to gap down-ish, then that level is my first level of resistance, okay? Above that is the next level at 39.50 we were talking about. The 200-day, that 4,000 level is a major one. And then perfectly enough, the new annual pivot up here at that 40.5708 lines up a lot with this downtrend that's been respected quite a bit, right? The only time we busted through it was that CPI number that just immediately became a failed breakout. So definitely would have an eye on that level. As far as support, if we open flat to gap up a little, and remember, so let me rewind just a little bit. I did tell you that this level here, 39.15-ish, is the first level of resistance if we gap down or open flattish, right? If we gap up, that level's too close for me. Doesn't mean it won't hold, but like I can't take shorts on emotional moves into that level, because first of all, it's so close that any move into it, there's no way it's emotional, right? I need the moves that I'm fading, especially for these day trades, to be emotional, fast moves. So if we gap up, that's too close, right? We gap up, then the very first level for me is that 39.50. And the reason I remembered I needed to say that is because right now I'm about to talk about support levels, and I'm saying if we open flat to slash gap up, then obviously there'll be some levels such as last week's lows, 3,800, right? Plus this 37.90-ish is the first level of support. If we gap down, that's too close, right? Doesn't mean it won't hold, doesn't mean it won't be support, but I can't just be buying a flush into that level thinking it's going to hold. If we gap down, then the first level is going to be these lows here down this 37.20-ish, which is also going to be right into that new monthly pivot, okay? Actually, that new monthly pivot lines up very well with these lows back here, okay? In fact, I guarantee if I drag this down, it's almost to the penny, okay? That monthly pivot is, I have it written down, 3706.33. Now, if you use the pivots in the True Trader Masterclass or whatever, you guys will be using classical pivots, and those are not, I use traditional pivots. So you can choose whichever pivots you want, guys. Makes no difference, right? Like, just have to make sure you stick to your system, right? If you use classicals, don't switch because I'm using traditionals, right? Use what you're comfortable with. Same way, like when people ask me like, oh, what moving average is your favorite moving average? Like, dude, find what works for you. I use the 20 SMA. It's no secret, right? But if you're using like the 20 EMA or the 9 EMA or whatever, use it. Just make sure your system is built around it, okay? You can't just jump from indicator to indicator, guys. But I do want to disclaim that because people may look and say, well, he said, what did I say, 3706.33. Actually, that one will line up with the classicals. The only two differences are the fourth pivot and the fifth pivot, I believe. Actually, no, the third and the fourth pivot are different on classical versus traditional. So this one actually should still line up because that is monthly support 1, okay? And then this would be the monthly pivot point right here. Very long-winded, right? 3,700 is the first level if we gap down. Remember, 3,800 I like if we open flat to gap up-ish. I do kind of like this level here, this 3,750, and I may actually kind of watch it. I'm gonna put this on my list just because hopefully you guys understand why I like this level. This was where that next long continuation trigger happened from, right? This was the pullback, that intermediate high, and this was the pullback that held for that move higher, right? So I do like that level, and I'm gonna have that on there. So throw 3750 on your list as levels that I like. If you watch levels that I like, I don't know. I don't know why else you'd watch the Sunday preps if you don't give a shit about my levels, but regardless. So those are the support and resistance levels I'm looking at. That's my game plan. Remember, I would love to see us try to go higher first, fail, which would help put in that lower high on the weekly chart. And then if we can break below December's lows, that's what's going to give us that monthly candle bar break lower. And again, that could, take that with a grain of salt, could be the first attempt at putting in a higher low on the monthly chart. Again, I don't see a reason why it would need to. There's absolutely no reason why this bear market can't continue as long as the author would like to. Okay. NQ. The only thing to really say about NQ is I just thought tech looked really like crap last week, and I'm actually really short biased on all pops in tech. Right. So into the 50-20 day / 11,400 is really, not quite 11,400, 11,435-ish. I'm looking to fade pops in tech. Let's take a look at Bitcoin real quick. Ooh, what do you know? Still channeling. It's literally, when this thing gets in a channel, it is the most boring asset class ever in the world to follow. If you don't know what I think about Bitcoin, just look at the last 2 or 3 weeks of Sunday preps. I don't think it's changed at all because all we've been doing is going sideways in this channel. All right, so let's get into the sectors, guys. Here's your ETFs. Real quick, we're going to go into bar chart and pull up the sector matrix real fast. All right, so energy had a big week, and what was the other one? Was it just financials? I thought there was one that had a different or a bigger week than that, but I guess it was just financials. Everything else was very lackluster, right? And before I forget, remember, one of my things that I've been saying for the last 3-4 weeks now, maybe even longer, is that I really do think in order for us to ever have a chance of this bear market coming to an end, we need to build a base. We need to see range contract, and we need to see a coiling of price, right? And if you look at the weekly chart, we finally had 2 weekly candles, pretty narrow price action. Now, granted, I think as long as we're below August's highs and October's lows, this can just, you know, for lack of, I mean, this is gonna look really corny, but hopefully you guys just, this is the kind of stuff that can happen where we could just, you know, we could mess around and whatever. It could just get really tight. But the longer we go sideways and build a base, then when we make a move up or down, I have a lot more faith that that move will be sustained. Okay. And so that's what I'm, you know, I still am sticking with that. I really do still think that we should see some coiling action. And, you know, actually I drew this is the box, right, to kind of show you anything in there, sideways action, just building a base. And if that's going to happen over the course of, you know, if this were to go sideways out to here, right, this is June of 24, right, we might have a very, very sideways market for a while that seems very boring to people that are long-term investors, or that are just swing traders and need to see bigger moves in order to generate alpha. But I promise you, the day trades are still there, because every single day, now granted the last week and a half, 2 weeks was slow as all sin because of the holidays, but it doesn't matter. Once the holidays are in the rear view mirror, every single day you come to the market, there's at least a handful of stocks that will make emotional moves into some levels and present day trades. So if you can't make money in a sideways market because you're a position trader or a long-term investor or just a swing trader that needs to see, you know, sustained multi-day moves, and this is the market we may go into. Again, I don't know that this is the market we'll go into, but I have a feeling that's what's coming. You're going to have to either adapt or you're going to just sit on your hands for a very long time, right? So if you want to learn how to day trade those emotional flushes or spikes in these levels, that's what we do at True Trader, right? So just throwing that out there in case I think it's probably a good case to make that a lot of people that watch these Sunday preps have no idea what the heck we even do over there at True Trader. That's what we do, okay? We trade intraday emotional spikes or flushes in the levels. We're looking to take, you know, not a lot, right? If it's a $100 stock, I'm probably scaling out after a point to a point and a half. You know, sometimes we'll take 2, 3, 4 points on a stock that's 60, 70 bucks if they make big moves, right, intraday, and go home cash at the end of the night and wake up the next morning ready to do it again. So that's kind of the elevator pitch on what I do on a day-to-day basis and what we're hunting over at True Trader. So now that's let's get back into the sectors. Let me pull up the ETFs again. All right, retail, I think still looks like popped back into these levels. The 63.50s where I'm looking to fade. I still think that this could put in that the next higher low on that weekly though, right? And if that's the case, it still needs to get above that 66. Let's see, what is it? 67.80 area before that would confirm this higher low. So I still think any pops back into those 66.50 areas going to probably provide good short opportunities as long as things get extended. Let's look at financials. Remember, financials had a positive week, but it's right into resistance, right? Now we're just pushing right up into the descending 20-day, underside of the 50-day. Granted, we reclaimed the 200, but I still feel like this could easily just really roll over. What I would look for on this is get rid of this drawing tool here. What I would look for on this is one of those setups that we talk about all the time, where we push up, break Friday's highs, but can't break Thursday's highs. And then the break, if we do that, then back underneath Friday's lows should take us back down, and we could possibly even come back down into this 33 range, right? So that would be what I would look for to see if financials are going to be weak. If we just break above Thursday's highs, then I wouldn't probably touch it again until we come back up into the 35 range, okay? Make sure I get off that drawing tool again. And I guess you could still play those as support levels as well. I'm not completely bearish on financials by any means, but where it's at right now would not be a buyer. Okay, this area up in here is definitely short bias for me. Real estate, exact same look as that financial sector. I still think anything up into the 20 days a fade. Again, I think I said this the other week, because it had this bounce ahead of this level here, I wouldn't be looking at this as support anymore. Even though it could be, I would still much rather if it come down to this 34 area if I was looking to get long. Again, not a sandbox I play in very often. This one, still holding that 134 level. This is healthcare sector, guys. I still think this looks really healthy. It is kind of stuffing the underside of the 20-day here, but it had a deep pullback. It's holding that really, really key level, 134. As long as we're above 134, I still think I'm bullish in that sector. That doesn't mean I'm looking for all kinds of longs in here. What it does mean is I make sure that I'm not looking to fade things that are in a sector where it could rip on me, right? So understand there's different ways to use this information, right? One person might look at it and go, all right, there's some companies in this sector that I like that have really nice setups, and I might look to get long. Other people might just be short bias traders, and they're like, yeah, well, I see that this is still acting strong, it's still holding support, so I'm not going to short anything in that sector as a way of protecting themselves, right? Remember, not losing money oftentimes is just as good as making money. And I mean, I can't stress that enough. A lot of people take avoidable losses throughout the year, and those add up, okay? Materials, still bearish if we push into the underside of the 20. Even if we get above that, I still think that 82 level looks pretty vicious. I don't know if we'd be able to get through it. I think it may still stuff the underside of the 50-day here under the 78.50, and if that happens underneath 76.66 could send it tumbling back down to some next levels of support, which I wouldn't think anything's going to show up till possibly 71. Okay, even, I mean, yes, there's a previous quarterly pivot there. Remember, these are going to be last quarter's quarterly pivots now that we're starting the new year, and yes, I'll put weight on that level, but I still think that this 71 area is a much more key level on this name, or this sector. Sorry. Industrial still holding this trend break, right? It's pulled back. It's kind of coiling. I feel like I could see it moving either way. And because I feel like it's kind of in no man's land, the easiest thing to do with something like that is to say, look, the only way it's going to prove to me is if it clears this 99 level. Excuse me. It would need to clear this 99.30-ish level. If it can't do that and it breaks below this 96.30s, then I would be short bias, okay? And it doesn't mean I would chase it short either. I would just wait to short pops back into this little range it put in that it just failed, okay? But again, when it's no man's land, I could see it going either way. Yes, it's holding levels, whatever. It's better to just know when you should sit on your hands and wait for something, right? Utilities. I still want this thing to come and lose, what is this level? 69.03, just call it 69. If it loses 69, we're going to get that major weekly short reversal up here, right? We've had this big move back up into levels, and now we've pushed up, put in a possible lower high here. So I'm going to need to move this because it's not. So what I'm looking for is this. Looking for this to be that lower high. I guess I can try to make that smaller. Okay, so if that becomes the lower high here, then the break under 69, just call it 69, should send this thing tumbling, okay? That's what needs to happen for confirmation. Remember, we had ideas like last week. I think I put the Duke idea out. I am short Duke from the levels we talked about last week in the Sunday prep. This is one of those situations where it makes sense to anticipate, right? If you short the pop thinking this is going to put in the lower high and your risk is over these highs, and you're looking to come way down here into the 65s, this makes a lot of sense to anticipate to get that better risk reward and be able to cut it if it's not working. And that's the same thing that happened with Duke, and Duke is even a better example, in my opinion, than the actual overall sector, just because of the chart set, okay? and it is what it is, right? It's one of those trades where you put the trade on, you accept the risk, and you let it play out. So the thing I would be concerned with, because I am in Duke, is that this Friday's lows hold, and then we come and break above, looks like Wednesday's highs, right? Because what that would look like, let me get a drawing tool here. You got this low, whoops, didn't mean to make it that big. Can I make it smaller? There we go. And then this higher low, okay? So that, if that triggers above Wednesday's highs, the target, the defined target would be up here into the 74s, okay? Granted, this setup already has triggered, right? We had this pullback here. If I can move this over here. And then this kind of was that higher low, okay? Even though it's more of a double bottom. To me, listen, guys, I don't really believe in double bottoms. Eventually, they're going to break one way or another. To me, a double bottom is no different than the same setup where it puts in a higher low. So that already triggered when we broke above these highs here. So if you were long biased based on this setup, then this dip on Friday was just your chance to get better prices if you were on the long bias of this idea. I personally just look at that weekly chart and see where we're pushing up into and just feel like this is the spot for this to reverse if it's going to. And if it's not, I'm okay with being wrong, and I'm also okay with just being like, yo, I'm hands off in this sector, because if that happens and then we go higher, then we're looking at that megaphone price action we've talked about, right? I think we've talked a few times about this, where you just have, I mean, it doesn't matter where you were to draw these trend lines from, here and there, and then you have here to here, okay? So if we come up here, I don't want to be involved. Megaphone price action to me is just gross, okay? I'd rather see this be putting in a much longer term low or high, and that this is starting to come down now. And we're in a bear market. We've had a big move up right into resistance. It makes sense to anticipate here, and that's why that Duke idea was out there last week. And that's just the same way I'm analyzing this sector this week, okay? Stapes already has that same look, guys. This is like the exact same look we just talked about on utilities, okay? So a break under here should send this tumbling, okay? Let's see what the monthly looks like on this real quick, just out of curiosity. Okay. Yeah, and actually I need, one thing I hate when I hate when it wants to show it on all these other time frames. There we go, okay. Let me get into the daily on this. Yeah, so you can see where that would be. That would be right here under it would basically be losing the 200-day again. We put in a lower high. That happens, and I think staples could start to get ugly, okay? Now, if it holds, you still have, again, you have that exact same setup that we had on utilities, okay? Right here. Whoops, did I copy that twice? Okay. So it's already triggered the long. But the thing was, it just went right into the underside of the 20-day and stuffed. So it feels like it's going to become that failed long trigger, and it's just going to roll back over. We'll see. It needs to take out 73.81 to do so. So I'll keep a close eye on it. And then under 73.81 or over 75.86, that would be where I'd be like, okay, over 70, what did I just say, 75.86? Yeah, over 75.86, and I'd be looking to fade this up into the 77s, okay, on an emotional move back into these highs up here. Discretionary still looks pretty gross, if I recall. Yep. So any kind of pops, this is the kind of chart, like if this was an equity, this is the kind of chart that ends up on my weak stock continuation short setups, right? So any kind of pop up into the 20-day / 138, I'm very bearish on consumer discretionary and ready to fade pops, okay? Same with communications, any kind of pop, 20-day, 50-day, and monthly pivot, right? And that $50 round psychological level. Biotech still look good to me. Just coiling, still coiling, getting nice and tight. Think a big move's coming, okay? But remember, we don't have to play guessing games. If you need confirmation, just wait for it to break out. Do not just guess, right? All you got to do is wait for some levels to break and then buy dips. Right now, when it's making this coil, That's the exact same thing we talked about with, was it industrials? Where it's in no man's land, right? Exact same thing, okay? You're getting nice and tight. But if you buy here, anticipating the break, and then it dumps, it was kind of a gamble, right? If you short here, anticipating the dump, and it rips, it was a gamble. There's no reason to anticipate in these situations here. These are the kinds of situations where you just wait for a trigger, and then you get entries where you are at peace with the risk reward, okay? So, you know, for instance, the real level on this for me at the moment would be over 84.21, and then obviously, you know, you'd feel a little bit better if it could come and break these highs here as well, which is 85.84, and then you can start to buy dips. I'd look to buy dips right back down into this level here, this 83. On the short side, you know, yes, it had this little breakdown here, but it's just a quick little failed breakdown. If we came under that, which is 78.11, under 78.11, I might look to short a pop back into 80. But remember, I think we talked about this too, was even if we break these levels, I'm not super bearish on this sector. In fact, I think I would look to get long on a flush down into 75. Okay, so that's Biotech. Tech, I think looks like crap. We talked about this with the NQ. Any kind of pop into the 20-day, 50-day / 128 to 129s, I'm looking pretty bearish, looking to fade those pops. Energy and oil had pretty good weeks last week. I think they're just kind of trying to get broken out from this this little hold pattern they're in. I really do think they need over Tuesday's highs to get going. But I would look to buy flushes down into 84 for sure. That's energy. And then oil, just trying to speed this up a bit. I've been getting long-winded on these talks. Still in this little consolidation pattern here. Again, this is one, remember when we talked about it up here, we could see it was just really struggling with the underside of the 20-day. It's kind of doing it again. Now, I still think, and actually let me just throw this at you, the exact same thing we just said about XBI and XLI. You don't have to play guessing games. I can buy dips on flushes down to support on emotional flushes for day trades. But for position trades, like if I'm trying to swing oil, an oil name for 1 to 3 to 5, maybe a week or a week and a half or so, I really need it to get above 140, okay? And then buy a dip. Other than that, you're kind of just gambling because you buy a flush and then it just rolls over. It was an avoidable loss. You short a pop and then it rips on you. It was an avoidable loss. I don't think anybody should really be shorting energy and oil. They're the only two markets that have been in these uptrends while the rest of the market's getting decimated, right? You want to short things? Put your money where the trend is down. Stop fighting the path of least resistance, guys. All right, that's the sector analysis. We're going to jump into long setups, strong stocks looking for continuation. First name on my list is DOCU. So it's had this really controlled retrace to the 20-day. Now it's trying to push. We got this little inside day on Friday. I'm looking, let's see, what did I write down? Because I know I want to buy a flush if it flushes emotionally. I think I just put the 20-day in my list. But if it breaks above, if it starts to go early in the week, right, we just get a inside day break up, I won't hesitate to attempt to just join trend buying dips on the name, okay? Basically, if it breaks Thursday's highs. So I would set an alert for over Thursday's highs and then look to buy a dip back into like, let's see here, let's zoom into some of the price action. Not a lot to like there in terms of levels. Maybe a 55 flush after it breaks Thursday's highs, but I'd rather get a flush off the open early in the week into the 20-day and scoop that. But I like, what I like about this is that it had the earnings move, right? And obviously it cleared some levels that it needed to get over, which was here after earnings. So it got through there. And now we've had this really, really controlled pullback. Hit the 20-day, bounce back up, and we're above those levels, right? So that's the reason it's on my radar. But we'll see. We'll see what happens because I would like that flush. I don't know if we get it. I think it just looks like it's wanting to go. And then I might have to try to join trend on the name, which is not as appealing to me as buying the dip, at least on this name. So next idea on this week's prep is Meta. And we talked about it last week. It was on last week's prep. It triggered the level on Thursday. Thursday gave the trigger. Then Friday we had the gap down, but I really liked Friday's price action. This was the trigger was here. Late day, kind of late day, right? Like mid to late day on Thursday. And then it gaps down. And so the gap down had me kind of worried, but if you were in TrueTrader, I was on voice on Friday saying I really wanted 117s as a dip buy because I like the chart on Meta. I think it's coiled up, ready to go, and it never gave the flush. But I like what it did do, which was it just was really strong, held higher lows, and then curled and went, right? And so to me, that makes me think like that gap down didn't bother them at all, and they're ready to still be involved in this, especially with it getting ready to bust. So basically, I think because it triggered already, you could just be looking at this as your opportunity to get better prices wherever you feel comfortable. I would really like 118 flush at the moment, 118.60, I guess. What did I write down? Yeah, 118.60 on a morning flush. That's the first area. But this is another name where if it starts to push early, I got no problem looking to join trend on higher lows and seeing if it wants to just have a big day. You can see Facebook can put in some big days when it wants to trend. After having that inside day on Friday, and if this breaks above Thursday's highs, and then I just sit there and watch it go all day without me, I would be so salty. So make sure you guys have a plan for either way. If it flushes, I'm looking to buy 118.60s with probably risk under Friday's low a day. Okay, I'm not gonna buy 118.60 and just have it just be a really down day, and I just take a big hit. I'll stop out under Friday's low a day probably. If it starts to curl again, you can always put the trade back on, guys. You don't need to let a trade go so far against you because you can't wrap your head around the fact that you could just stop out and re-enter. That's a huge thing for a lot of people. Keep on trucking. Next idea on this sector is Nike. If you remember, XRT kind of was talking about the fact that I think XRT is going to have a push over. I don't even know if I said this when I talked about XRT. I think I said I'm short bias if it pushes into 63.70, but it has to get to 63.70, right? I think it looks curled and ready to push if it can break over 60.68. So if retail is going to go, I like this Nike chart. Look at this gap up on the earnings, and it's just so coiled. Okay, and so over 118.24 is the legit trigger. Okay. Basically, you've got the pullback, push up, the higher low, and a break over that should send it, okay? So basically, set your alerts. If it triggers, basically, I'm looking to join trend on dips, okay? SLB. Remember I said I don't like to short the oil and energy sectors because they've been so strong. This chart looks beautiful to me. Just surfing the 50-day, holding the 20-day, getting nice and tight. Again, I think over 53.87. What did I write down? Yeah, 53.87. I think this could push up to 56. And so I'm looking to possibly have a trend trade on SLB. Slumber. I said I would also be interested in a hard flush to the 20-day for a bounce as well. So right off that quarterly pivot / 20-day. So if it flushes 51.20s, I'd look to scoop it as well. All right. And then last but not least, MRNA. I'm looking to bounce any hard flush off of Friday's low a day, which is that 50-day / quarterly pivot, last period's quarterly pivot, granted. But I love this big sell-off. And what did it do? Remember, we've talked about this so many times. You come down like this, and people see this, and they think, okay, I'm just going to use a stop under this day's low, right? And what's it do? It just stops everyone out and then curls and goes. And that's all it did. It just stopped everyone out, and now it's up. So any kind of flush back down into these lows, and I want to be joining on the long side. This name always has a ton of range. It's a $12 mover on a $180 stock. So make sure you understand how to trade things that have wider range. Okay. All right, that's it for strong stocks looking for continuation. The next section is oversold reversion. And the name I'm watching is RIVN, and it's obviously going to follow Tesla, right? So I'm still looking for that bounce trade on Tesla. What RIVN has that Tesla doesn't, and I'm kind of anxious to see if early this week Tesla ends up getting this. But RIVN already has it, and that's the higher low here. We don't know. We talked about this in this very Sunday prep, right? We don't know this is a higher low until what? Till it breaks above Thursday's highs. Okay, so Thursday's highs is the trigger. But I don't know if I'd rather have better. This is one of those ones where I'd rather anticipate and take a paper cut and get better risk reward if I'm gonna be right. Because if this is going to be the trade, this is not going to be just a day trade for me. I'll put it on as a day trade, but I would definitely, if we break Thursday's highs, I definitely want to leave some on and possibly even add in the coming days if it stays strong and starts holding higher lows for a move back up to the 20-day. Let's see. So I said in my notes I wrote down, I don't mind scooping a flush into Friday's lows with risk under 1730 for a swing entry. Let me look. So 1730s you see is this kind of this pre-market action on the day when it did put in the low, right? So pre-market, this was Wednesday, pre-market Wednesday had these lows around 1730. So I don't mind scooping anything down into this 1770, 1760 with risk under that for a swing, and if I'm wrong, take a paper cut, right? But if you're looking for a day trade, I think the play is a bit earlier. I think you play against this 1790s, and you can just keep, if you don't have that swing mentality on this, you can keep tighter risk with a stop somewhere under like 1780, 1779-ish, right? Again, we just talked about this. You can always re-enter, okay? But I do think that this thing, again, let me find the tool right here. You put in these lows here, you push up, you get this higher low, and we break above these highs. This can go back to the 20-day. I want to be a part of that move, okay? And can RIVN go lower? Of course it can. It's going to depend on what Tesla does, right? RIVN definitely can go lower. One thing to watch for though is this. Make sure you understand that this is a key level, okay? So maybe it breaks Thursday's highs. Make sure it can eventually reclaim 1925, because that was the previous 52-week lows. And if it breaks Thursday's highs and then stuffs that, just keep in mind that just because you broke Thursday's highs doesn't mean this can't stuff in your face and come back lower, shake you out, and then maybe start holding higher lows again and then go. In fact, I'm not just going to buy it right off the bat if we break Thursday's highs. I'm going to wait for better prices if that happens. But I will be trading Tesla with it, so understand what needs to happen on Tesla too, right? So let's look into a 2-hour chart. So Tesla has reclaimed the 120-minute 20, but it has not really tried to go lower yet, right? Via a short continuation trigger. So once it has that, that's where I kind of want to buy a dip on Tesla. I really want that 114 to 115 area. And I, wasn't really going to be something on my list this week as far as something I talked about. But yeah, just this level here, 114s, okay? Any kind of flush there, I'm looking to buy Tesla as well. Get all that off my screen. And if we get those, what's that going to do for the daily chart? It's going to give us the possibility of that higher low, right? And then we can break. And then if that happens, a break over Friday's high sends us back to the 20-day. Okay, simple as that. All right, that's it for long setups. We are going to head into the short setups. I need to change the sizing of this thing. Hold on one second, guys. All right, here we go. All right, the first week stock looking for continuation I'm looking at is Roblox. Looks like it's ready to push, right? That's what I'm hoping it is. Because any kind of push is going to put us into these levels where we had that big gap down. And if you look into some intraday stuff here, you can really start to see these levels, okay? So this 3130 level, which you can see was where we had that major flush and then it bounced. And if that doesn't work, 33.60, right? I do not mind stopping out and re-entering on something like this, because a big move up into 31.30s from where we closed, 28.40s, that's a 3-point move. What's the ATR on this? It's a 2-point ATR, right? So we're already going to be well above its ATR into a key level. And you look at this daily chart and just look at how many people are bagged in those levels that they bought and got gapped down on. So that's the whole thought process there. Again, 31.30s, and if that doesn't work, 33, what did I say? 33.80 to 34, pretty much. Next idea for shorts, Airbnb. I'm stealing for Javier, buddy. I'm stealing your idea. He asked me about this last week, and I think the 20-day had not come down as far yet. The 20-day is up here, and I was saying, watch the 92, 93 level. I'm looking at these 91s now with Javier. So shout out to Javier. He's in True Trader, and he has a great eye for these setups, and I absolutely love that setup. So any kind of pop into 91, I'm looking to fade Airbnb. Next idea, NVIDIA or NVIDIA, which I would never say. I am looking for 157.63. Why? Because that's the new monthly pivot starting next month, or starting tomorrow. Yes, the annual pivot from last year was 157.69. Remember how key that level was. Look at, 1, 2, 3 bounces from there. So now we're below it. I want to pop back into that 157 level to fade NVIDIA. Next idea is QCOM. And it's going to be, this one's kind of correlated to NVIDIA too. So like, if maybe you just want to trade one or the other, I kind of feel like if you get that move on NVIDIA, you probably have a good chance of getting this move on QCOM. Okay, but I'm looking for a push into this 118 area. Just had a lot of support there, and it finally broke down. Hasn't really retested yet. So any kind of emotional pop on Qualcomm in the 118s, I'm looking to fade. All right, and that is it for the short setups. In the overbought reversion setups, there's nothing notable, nothing that I really cared about. I'm stalking a few. VKTX, I think it was VRNA was another one I kind of, VRNA I'm kind of watching, but the liquidity's really gone to crap on that one. I think VKTX is kind of getting illiquid as well. Yeah, not quite as bad as VRNA, but it's also a lower price, right? So dollar volume wise, they're both getting really illiquid. I'd love to see a day where they have high volume and a squeeze. And if that happens, I'm stalking them for overbought reversion setups, but at the moment, nothing. So I do have another setup I wanted to talk about, and that's BABA. And I just wanted to point something out about it. And that is, we had this long trigger on last Tuesday, okay? Ever since that trigger triggered, it's just stuff. And remember, failed long triggers oftentimes create the best short triggers, right? Or the most powerful short triggers. So if this now loses the lows from where that long trigger started, I think this could really roll over, right? Because this is going to result in, if this triggers on the downside, it's going to be the first short continuation trigger since the push up into the weekly downtrend, right? And so, I think everybody thought the bottom is in on BABA. I think a lot of money has come in because there is this huge anxiety or anticipation of the China reopening trade, right? And I think there's a lot of FOMO. I think there's a lot of people that are just so anxious to get in there, but until these higher time frames change their stripes, it's still a downtrend, right? And we talked about the long trigger. The reason we talked about this long trigger was because somebody asked me about shorting it, and I didn't think it was ready. Why? Because it's holding the 20-day, and you have this long setup. But we're still under the 200-day. It's still stuffing ever since that long trigger fired off. So below, the level is 85.04. Below 85.04, you need to have an alert set, because that's going to be a pretty big short trigger for BABA. It doesn't mean that I would take it right at 80, like right on the break at 85. It would have to depend how that happened. But I would probably be looking to fade pops back into levels like 86, 87 for some continuation to the downside. So it's just one of those trades where it doesn't really fit nicely into any of the 4 categories I talk about on a week-to-week basis here on the Sunday / today's the Monday prep. But definitely worth noting because I want people to have this on their radar if it sets up. Okay, so I'm going to hop into the questions if there's any. Let's see. Ragu says, looks like more sideways trading until the CPI data in January. Very well could be, right? We just kind of talked about that when we were looking at the broader market. And I do think, I think there's a lot of credence to that thought of just having, not even just waiting for CPI in January, but there could be a lot of sideways action for all of 2023 if that's what happens. Like, we've seen it before in the markets. There have been periods where, like, look at this right here, this 2018. I don't know if you guys were trading back then. I remember this, but there wasn't a, this was all 2015 to 2018 was a clear uptrend. But then we just had this chop, this sideways for a while. And then obviously we did have that bit of a, technically it was a bit of a bear market in late 2018. And then we had the COVID crash, right? And then ever since then we had that, really, really long bull run. And now we're in a clear downtrend. But there's no reason to think that we can't go into some sideways action. We had it here too from 2015 all the way through to like 2016, like a year's worth. So it happens, right? And it can, and I don't see why it can't or won't happen again. And if it does, it's a lot of times it's what's necessary to let this big move down digest and build a base for a push either up or down. So we'll see. Let me see. Let me pull up the chat. Hold on 1 second. Trying to find some questions in here that. Let's see. Do I ever use fibs? If not, why? I do. But I only use them, the only time I use them is for confluence, right? So if I'm looking at a level, let's pull up one of the ideas from the prep, right? Oh, and one last note before I forget. All the ideas from last week that never triggered or never hit those levels are still valid. I just don't want to keep rehashing them in the prep every single week, right? So I think Coin, CrowdStrike, Disney, Marvel, all still valid, right? So even though there was 11 ideas this week, there's still a bunch from last week that are still just as valid. But let's look at Qualcomm, or no, let's look at NVIDIA. Okay, NVIDIA, we were talking about a short at 157, right? Well, if we bounce into 157, I also want to know, is that going to be a significant fib level from those lows? Oh, I didn't draw it very good there. So you can see lines up pretty damn good, right, with that 0.38 retrace. Okay, so I use it as a level of confluence. I have the level I like already, but now I want to know what are other traders that use other tools looking for that mean more eyes will be on that level than just people looking at what I'm looking at, right? Because I'm looking at pivots, and I'm also looking at what if I can delete this? I'm also looking at levels that were significant, right? That held 3 times, had nice bounces. Now we're below it, okay? So it's also been a level that's been tested a bunch. So I know there's going to be some eyes on that level, but there's other traders that don't use pivots. There's other traders that don't use the 20 SMA. There's other traders that don't use all these different tools that are in your arsenal. But you still want to know what they're looking at, what levels make sense to them, right? Same with volume profile, right? If I threw a volume profile on here and it had a big old high volume node right here at the same level, look, there's one more piece to the pie of confluence, okay? Let's see here. Hopefully that answered that question. Could I look at UAA? I see price closed above a rising 20-day. Friday just under the 200-day, which had rejected it 2 weeks prior, gap down in early May, and hasn't been able to close that gap. That's from Chad. UAA. I think he said UAA, right? So yeah, it's in terms of what I see when I look at UAA, you're 100% right? We're struggling with that 200-day. We had to push into it, but in terms of just looking at a trend, it does look like it's trying to have some continuation. I would, we had a big push way through the weekly 20, right? And even though we broke above these highs here, let me draw a line for you real fast. That became a failed breakout, right? And that was into the 200-day, and then it rejected. So honestly, where I'd like to see it come down is retest the weekly 20, and show some support there, and try to set up with a higher low there, and then push. But you have some technical setups here on the daily. If it doesn't want to break down and come and retest some of those levels, this pullback right here, if I can get these circles to stay small enough. Actually, not that one. Well, yeah, yep. Just put this on the wrong thing. So you had this pullback, this push up, and then this little double bottom / higher low right there. And then the trigger was the break over those highs. Okay, so technically this has triggered a long continuation trigger with a defined target of these highs here that were the ones that rejected, right? Which was 1087. So you've got a trigger. So you can buy dips with risk under these lows, risk under 940. You can buy a dip with risk under 940 with your target being up here close to 11. Just remember, if this fails, just like I said with BABA, long continuation triggers that fail create the strongest short triggers, right? And so if this fails and we lose 940, that's where you're going to get that retest of the weekly 20, and we can come back down here into this 850 area. And that's where I'd like to see it come and find support, and then set up on the weekly chart. Because right now, even though the daily's in this uptrend, the weekly chart's really kind of been in this big downtrend. And even though we reclaimed, ever since we pushed, we had that failed breakout, I'd like to see it retest. And then you can form a bit of a base here. You can see how the weekly 20's flattened out, and it's even slightly up, right? But I still want to see retest of that level and hold. Hope that makes sense, okay? Yogi says long CVX around 175. I like oil and energy. I'm gonna look at a daily, see what he sees here. Yeah, that was the breakout level. And again, this is just that same setup we just looked at, right? Here's your lows, and then here's your higher low, and then the break. Okay, so in fact, it's already kind of retesting that break spot. Wouldn't surprise me if it just goes from here, right? It wouldn't surprise me if we see it clear 180 and just start ripping. It's going to depend on what that sector's doing, but yeah, I like that 176 area for sure. So, and Yogi's always got a good eye anyway. I trust him. Yogi also says HP long on a retest of 45 to 46. Boy, oh boy, man, you don't like the volume, do you? You want me to turn it down for you, Yogi? This stuff trades like less than 1 million shares a day, so I won't trade it. But if you guys are looking swing trades, you don't have to care so much about the volume. You still got to care, but you don't got to care the same way a day trader has to care. Yeah, I think flushes down into those levels offer pretty good risk reward, because I think you just cut it if it loses 44.60s. What is these lows here? 44. If it loses 44.50, I'd probably cut it and say I was wrong. So I think you could buy dips down there, but again, with that kind of volume, the only way I'd be involved in it is if it's a swing. All right, yeah. Okay, guys, that's I'm gonna wrap it here. Like I said, it's my daughter's 13th birthday, and so I gotta rush out to go join them. They're actually my wife and all 3 kids. My wife is brave as hell. She took all 3 kids to the nail and hair salon so that her and my oldest kid, whose birthday it is, can get their hair and nails done. And that means my 2 other young ones are probably creating havoc at the hair nail salon. So I can only envision the scene that's happening there. Guys, if you're not a part of True Trader, I highly suggest you check us out. There is a 5-day $30 trial. I think maybe they raised it to $40. I don't know. Use the code YouTube. You'll get 20% off, I believe. But check us out, because I'm telling you, like, we've got all the angles covered. You see what we're talking about in the Sunday preps. If you don't understand what I'm talking about, that's because there's a lot of nuance to it. There's a lot more to it than just what I can fit into an hour-long Sunday prep, guys. So check us out. If not, I will see you in the markets tomorrow, Tuesday, ready to crush 2023, boy. And I hope it's not your money I'm taking. See you guys later. Stay safe. Peace.